Well, let's go from chips to the credit markets. Wall Street's watching closely as the Treasury hits the market with its latest 30-year bond auction. Investors are parsing demand for long-term debt amid rising deficits, shifting rate expectations, and, of course, the economic outlook is uncertain. Rick Santelli joins us now from Chicago. Rick, what do you have?
Yeah, there is a lot to unpack there. Let's start at the beginning and let the charts do some talking. If you look at 2s and 10s since this morning, about a 7-hour chart, you could clearly see that at 1 o'clock Eastern, rates went up, and they went up much more dramatically in the 10-year than they did in the 2-year. And that was the 30-year bond auction. Now, let's go right to the 30-year chart. You can see how it shot up. It tailed 2 basis points, which means higher yield at the auction means a lower price for the government selling against the benchmark, where the auction set up called the when issued market. We don't want to get too much in the weeds. Suffice it to say, deficits, they're really nothing new. However, we did see that inflation metrics on a variety of fronts seem to be moving up a bit. Next week, we have both metrics, CPI and PPI, for inflation. And today, initial claims, even though they were up a bit, 226,000 is very tame. Productivity did have a negative revision, but still 2.4 was solid. So you could say that the short end is paying attention to data that maybe makes easing a little less aggressive. And if you go and look at Fed fund futures, they're a whisker lower in percentages, still 90% for September, but it did come down a bit. So it makes sense that yields in the short end are a little bit higher. And finally, the dollar index. The dollar index, this chart starts on jobs Friday. We could see the big break. Today is one of the few days it's slowly turning up on the right side. But do keep in mind, even with interest rates kind of being buoyant, although in a range to some extent since the jobs report, it isn't getting any bounce to the ounce of significance. The dollar index, the benchmark that traders are looking at, is as long as it keeps closing under 100, it's finding little love in the speculative community.